Hi, I'm Kristen Orman, Research Director for the Oxford Club and the real brains behind Mark Lichtenfeld. Welcome to a new episode of Buy or Buy. In this series, we take a popular stock, making the media rounds, peel back the mystery, and reveal if it's truly a top stock to buy now, a great long-term growth opportunity, or a ticker to avoid at all costs. Today, I'm taking a look at Tesla, a company who has trouble avoiding the spotlight of sensational headlines. But hey, isn't all publicity good publicity? Whether footage of a crash caused by self-driving Tesla, an engineer testifying that autonomous driving footage was faked, or CEO Elon Musk being too busy auctioning off the neon Twitter signs, these stories pushed the stock down 64% over the last year. So that's it, right? Stay away? Well, recently, Tesla announced it'd be discounting its car prices by up to 20%, a counter-inflationary move that caused a 12% jump in the stock. And while the flash sale angered longtime luxury customers, many other EV companies followed suit, signaling a larger trend to make electric vehicles more accessible for mass adoption. So the question is, does this bump in the stock put Tesla on the road to recovery? Or is the share price for the fabled automaker headed toward the junkyard? Let's start by going over the bull case for Tesla. Love him or hate him, CEO Elon Musk is larger than life. In fact, Elon's reputation for creating out-of-this-world technology is so big that senior research analyst Anthony Summers and I used to jokingly refer to him as our tech lord and savior, Elon Musk. There are plenty of Elon disciples out there. And as of now, investing in Tesla is the only way to invest in the eccentric billionaire. His other companies like SpaceX, The Boring Company, and now Twitter are private. There will always be muskrats waiting in the wings to scoop up shares to show their support. Of course, Tesla isn't just an Elon Musk investment proxy. It's a real company with real products and financials. And the many bulls argue that Tesla's financials have never been stronger. Tesla reported fourth quarter and full year 2022 earnings last week, and revenue, earnings, and cash flows beat investors' expectations. The company also had $22 billion of cash on its balance sheet at the end of 2022. And Tesla is leading the charge in the world's transition to sustainable energy. Over the past several quarters, Tesla has delivered record sales numbers and is deserving of trading at a much higher multiple than traditional auto manufacturers. The company has become synonymous with EVs in general. Not quite to the extent of Kleenex and tissues, but for a while, Tesla was the only big name in the game. But with that in mind, let me outline the bear case for Tesla. First up, competition is rapidly intensifying in the electric vehicle market. And Tesla's recent price cuts are evidence that the company will have to sacrifice margins in order to compete. In fact, the bears believe that the company's most recent price cut will drive profit margins below 20% in 2023. Margin compression should lead to multiple compression as well. Tesla is currently trading at 35 times forward earnings. In comparison, General Motors and Ford trade at 7.4 times and 6.4 times forward earnings, respectively. Even if Tesla deserves a higher multiple than traditional auto manufacturers, it doesn't deserve one that's 5 or 6 times higher than those auto industry behemoths. Next, the bears say that CEO Elon Musk is distracted, and they very well may be right. Musk definitely sounded tired on last week's earnings call. And who would blame him? He spent the first part of the week getting grilled by Congress about his tweets back in August of 2018, saying he had funding secured to take Tesla private for $420 a share. On top of that, he's running SpaceX and trying to right the ship and pay down debt at Twitter. He's got a lot on his plate, and the bears think he has taken his eye off of the ball at his electric vehicle company. Tesla's innovation and financial performance might suffer in the months ahead if Elon can't refocus his energy. Finally, the bears will point out that heavy insider selling, even with the stock trading down 65% last year, has continued. Musk sold nearly $40 billion of Tesla stock last year. He sold more than 22 million shares of Tesla in December alone, putting further pressure on the stock price. In late December, Elon Musk vowed that he would stop selling Tesla stock. Of course, he's made and broken that vow before. In April, Musk's Tesla holdings make up the vast majority of his $145 billion net worth, and he said that he needed to sell some stock to, quote, account for a worst-case scenario. By the way, Guinness World Record holder Elon Musk also doubled down on his prediction that the U.S. is heading for a serious recession this year. That record is for the worst loss of fortune in history, personally losing $182 billion since November of 2021. Any further stock sales by Musk will likely seriously spook investors and send Tesla shares tumbling. Ultimately, profit margins and trading multiples will become the make it or break it battleground for this stock. Okay, before I reveal my final verdict, just a reminder to subscribe to this channel by clicking the red button and bell icon below. That way, you never miss a video from the Oxford Club. Back to Tesla. Should you grab shares now or stay away? Full disclosure, my husband and I were long-term holders of Tesla. We sold our shares a little over a year ago when we felt the stock got way ahead of itself. So it shouldn't come as a surprise that after looking over the data and forecasts for the company, the industry, and the questionably human CEO, I think Tesla is a buy. BYE. If you want to invest in a car or technology company, pick one with fewer distractions. And Elon, if you're watching, you might want to take this advice too. Now, as a reminder, these are not recommendations tracked in any Oxford portfolio. So if you want to follow any of my buys and sells, size your position accordingly. Set a trailing stop and never bet more than you can afford to lose. Thanks for watching this episode of Buy or Buy, and we'll see you next time.